This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by SmartBooks, provider of bookkeeping and accounting for businesses. Let's get started. So I'm really excited to be speaking to today's guest, Adam Landrum. At SmartBooks, we work with business owners and maybe 100 or so that we close the books for every month. And once they get to a certain level of income, they sometimes ask about real estate as an investment. And maybe they've maxed out their 401k contributions or their simple IRA contributions. And they want to know what should they do after that? Or they've got a stable business and they think, maybe I should try to buy my office building. I used to be an active stock and options investor in my younger days. After my kids were born, I went completely passive into, stock market equity index funds. And so I'm out of the active game myself. But I do find I'm not really qualified to talk about real estate as an investment. I've never done it myself, but I figured, hey, let's get somebody on the show who has done that and can talk to us about it. So I'm really excited to hear your story, Adam, your entrepreneurial journey, and what you got you into investing in real estate. So welcome to the show.
Thanks, Cal. Thanks for having me on. I appreciate it and excited to talk about this topic.
So I know you started out, well, maybe we should go back in time a little bit. You started out, well, I got introduced to you by Jamie Mulliken, and I think you ran a marketing agency maybe with him at some point. But how did you start out in business? What was the beginning of your entrepreneurial journey?
The beginning, the precursor to the entrepreneurial journey was public accounting, CPA, with a firm called Arthur Anderson, which is no longer with us.
Thanks.
But I did that in 80-hour weeks or 70-hour weeks, whatever it was. It was ridiculous. And I'm like, I am not doing this. I've always wanted to start my own business. So the loathing for public accounting put me in a position to say, hey, if you don't like this, go do something else. So I started a web firm is what it ended up being in 2021.
Cool. Yeah, I remember Arthur Anderson. I remember the Enron days. That was back when I was still actively investing and was keeping a close watch on all of that. Too bad. A lot of good people at Arthur Anderson, but unfortunately a few brought down the firm.
Yeah, few bad apples. But that web firm ended up becoming a digital agency, and then in time a full-blown agency. And we specialized in branding and marketing for higher ed, for colleges and universities. And Jamie, back to full circle, was my VP of strategy for several years, and we've known each other for a long time. He now owns his own agency and is growing that. So yeah. So are you telling me you are passively investing? Does that mean you're doing Bitcoin or no Bitcoin?
It's enticing, but I feel like I don't know enough to invest in crypto. So I'm just broad market index funds, US and international with Vanguard. That's my deal.
At the end of the day, it's probably the safest route. So
I want to make sure if I invest in something, the odds are in my favor. I can beat the market, and I just don't know enough about crypto, and so I'm going to stay away from it.
Yeah, it's been interesting. All right, well, so we'll talk about real estate. That's what we're here for.
Yeah.
Right?
So you had this, web firm marketing agency, making some money, and then at some point you decided, what the heck, let me get into real estate. So what was that like?
Yeah, and just for the listeners, so they know, hopefully what I'm going to share is sort of maybe where they are, and that is, I didn't know a ton about real estate either, and historically it's a good investment. So if you're looking for an expert in real estate, I'm not the guy, but I will tell you from a layperson standpoint, a business owner standpoint, how I've approached it. And that's sort of how I even do business. It's like common sense. I don't need an MBA. I'm going to use common sense. So so it just for me, Cal, it was really practical of why I bought a business or bought a building, and um, I was paying. The first thing that happened is I just looked down. I was paying $5,000 a month, I think, at the time or around that, and I think my lease was due. So I had, and I think the landlord wanted to extend it to a 5-year lease. So, if we do the math on that, 60,000 times five, is going to be over a $300,000. I think at the time it's going to be like almost a $500,000 commitment and liability that I was going to sign. And I think too many business owners don't realize how significant that obligation is and that lease is. And so that's the first thing. It made me think about what I was about ready to sign.
Hmm. Yeah, I hear that sentiment a lot, even residentially with people who are, renting apartments or condos. Like, I'm tired of just throwing my money away. I'd rather put it toward a mortgage where I'm eventually going to own something. So I think that's a pretty common sentiment, right? And so I feel like that's what you were saying. I'm spending $5,000 a month, but maybe I should own something at the end of the day. And it takes a long time, but eventually you do own something, right?
Yeah, I mean, when you're spending that much money, you start to question of like, well, wait a minute, after 5 years, I'll have nothing, or after 5 years, I could have at least put a pretty significant chunk down towards equity, and I would still own it. So that was my train of thought, and you're right. And sometimes I think conventional wisdom is always buy, buy, buy. That may not always be true. Sometimes it's smart to rent. But my business was at this time relatively stable. I'm thinking I was about 12 years into the business. And, that also gave me the confidence that, hey, we had enough history that we could, um, you know, again, I had confidence I could make big bank payments. So I didn't lose my house. So that was the first thing. The second thing was, you have these moments in life that you look back and you're like, oh, that was a special moment or whatever. And I might be overplaying it here, but I had a consultant in Tennessee. He consults agencies, and he just said at one of his seminars as that he said, you know, you're not going to build your real wealth selling your agency. You're gonna build your real wealth when you sell the building your agency owns. And so he planted that seed, I don't know, a couple years before that. And I was just thinking, huh, okay. So, and what's going to end up being, I sold my agency in 2023, and I would say it was is a life altering event. Maybe on the I don't own a private jet, but it was on it was a life altering event. And if I sell my building now, it's probably going to be 2 to 3 times what selling my business was. Now that's all relative, but that's just going to be my experience. And so buying a building from my standpoint has ended up being a great investment.
And you're in the Greenville, South Carolina market, which is, I'm up here in Massachusetts. I don't know a lot about it. I have a fraternity brother who is from Greenville, but I understand it's kind of a growing market where it's probably hard to lose money in real estate as long as you're not over leveraged. Would you agree
We
with
we have at least one advantage over Massachusetts, and we have sun,
that?
and we have a lot of it. Yeah, no, Greenville is definitely it's a hot middle market. It's halfway on 85 between Charlotte and Atlanta. We're gonna see Charlotte and Atlanta become one day. And Greenville's right smack in the middle, and it's just yes, it's a really really cool market. Cool. So the real estate's relatively hot. So that was definitely a factor into I figured it was just going to go up, and that's proven to be the fact.
So so you're paying, 5 grand a month or so rent in an office building. Assume it was a building with other tenants, right?
Yep.
How large was the building
That I was in, or that ended up buying.
that you ended up buying? Yeah.
Oh yeah, yeah. So yeah, so my Let me say what my intent was, and then I'll tell you what I ended up buying. My intent was, I think one of the hardest things, whether you're leasing or buying, is trying to figure out how much office space you need, right? Like that's because you sort of get locked in, and then if you do the goldfish thing, and it'll only grow as big as the bowl. And so it's really challenging to buy the right size or even lease the right size space. So my idea is I wanted to buy a building that was twice as big as I needed. And we were probably then we were about 12 people then. And so I was thinking, I don't know, 2,500, maybe 3,000 square feet times two, give me a 6,000 square foot building. That'd be great. And the reason why is you could sign another tenant, right, to the other half of the building, maybe give them a 3-year lease. And then, hey, in 3 years, if you need more space, you take more space, or maybe you take over the whole building. And they also help you pay down the note. So it reduces the risk a little bit.
But
Of
then you
course,
have one other tenant, so it's kind of like 0 or 1, right?
you yeah. Well, you mean, yeah, eventually it would be 0 or 1, yeah.
Yeah.
So at the beginning, you do have another tenant, and you do probably have a bigger note. So that's a little bit, well, I don't know, to me, that balances. I felt that was less risky than me buying just a building solely for myself and then sort of being locked into that footprint. So that was my intent, and that's what I would recommend people probably do is look for a 2x and then put another tenant in the other side in the beginning. Well, what ended up happening was Greenville was so hot, I literally knew more about what was on the market than the commercial realtors did. I had a commercial realtor, and they're like, "Hey, Adam, this property just came up on on Main Street." I said, "I was in that property 2 days ago." I mean, I was very into it, and I really knew the market, and so it was getting harder and harder to find buildings. Atlanta was starting to invest in Greenville. Charlotte was starting to invest in Greenville. I had been outbid on a couple buildings, and so like it was it was the time, sort of like during COVID. If you tried to buy a house, like you had to have cash, right? You had to be ready, and you had to bid up 20 to 30,000 more than asking. So that was basically what the environment was. And I told the realtor when we got on the steps of this property, I said, if I like it, we're putting an offer in today. And he said, okay. So this building was a 20,000 square foot building, way bigger than I needed, almost 6 to 7 times bigger than I needed. But I ended up, long story short, there's another person bidding. We were bidding each other up on this particular building, and he said, "Hey, instead of bidding each other up," he said, "Why don't we be partners?" And I said, "Oh, all right, that's great." So I had one caveat. I wanted to me I wanted to be the managing partner and him the minority partner, and he said that's fine. He agreed to that. And that ended up working outstanding because now we had two owner occupied tenants. Banks really like that, by the way. So if you're taking notes, they like that you're owner occupied, and typically you need to occupy owner occupy half of the building. And so between his company and my company, we magically occupied 51% of the building.
Nice, nice.
Yeah.
Um, and then so you built this building. It's probably more than you were gonna personally manage yourself. Like, so how do you go, like, how did you approach the maintenance and property management side of things?
See, this is where I might look brilliant, but I'm not. You'll find out quickly I'm not. Is the partner that I partnered up with was a commercial developer who had a property management arm and an asset management is making sure it gets leased and all that good stuff. So we paid them a fee, as a even though he was an owner, we paid them just as a third party, and they manage all the property, or all the yeah, they manage the property, they manage the tenants, and they handled the leases and stuff. So I would be, as the managing partner, I would be in the know and I would give approvals and stuff, but they did the heavy lifting. So, I overall I would recommend to people, like, you probably want to hire you probably want to hire a property management company. You don't need an asset management company. You probably just need a realtor, a commercial realtor to help you get the tenant. Um, you want to focus on your business. You don't want to focus on the building because the building could take a ton of time.
Yeah, that's the one main thing that's kinda deterred me from getting into real estate over the years is I don't wanna be the guy who has to take the call when, like, the septic system breaks or the pipe bursts in the middle of the night or something like that. It's like, I can just invest in the S&P 500 and not have to worry about it. But I think, if you're smart about it, you could probably make a little more money with active management, but you've got to find the right partners to help you manage the asset.
You definitely do, and yeah, I don't property management's not too hard to find and outsource, but yeah, there. I mean, there certainly were times we had a water main break, and it's a 2-story building, and I don't know how many thousands of gallons of water just went through our downstairs, and I was very involved in that. We had a hurricane, come through Greenville, Helene, with we had down trees and yeah, so there's little stuff that you do have to deal with, but I would say the you can invest in the S&P 500, but you also have some pretty nice benefits. One benefit, like I said, as a layperson, so I wasn't fully aware of this, even as a former CPA, was we had a really large depreciation write off after the first year and recapitalizing stuff, and so because of that, I got a massive refund. I wasn't even anticipating. And partly, one question listeners may have is like, hey, how did you finance it? Because I think we had to put maybe 3% down, and so I needed for my side about $250,000, which I did not at that time have laying around. So I had partly friends and family help with that, and I had a mentor who chimed in. So I had two investors. I was able within 12 months to be able to pay one of those investors completely off $100,000. Here you go. Thank you very much. So I didn't even anticipate that as a benefit.
Hmm. So I'm curious how you went about figuring out the valuation, how much money to pay for the building. I mean, these days, maybe you can ask ChatGPT and they'll do a bunch of analysis, but that didn't exist at the time you were doing your deals, right? So, how did you go about figuring out how much to bid?
Yeah, great question, and I'll even share. I think a mistake that we made. Yeah, that like it's not even fair that people who are looking to buy a building now have chat. Like that's I don't think that's fair. I think you should pay like twice as much or something. But yeah, I think I looked at I had spreadsheets. I probably was searching Google on how to do mortgage calculators and stuff like that. But it's not that different than buying a house, right? And you buy the house and you go, okay, well, if the loan's eventually going to be 5 million, say it's $5 million, if it's going to be $5 million, what's the payment? Okay. can, can I afford that? You got some pretty high level litmus tests in terms of, okay, well, what's the market rate? $20 a square foot, 3,000 square feet, that's I'm just doing math in my head. That's 6,000 times 7, so it's 72,000 a year. So okay, $6,000 a month. Excuse me. How does that work in my um in my cash flow? So I primarily just sort of looked at it from a cash flow standpoint. My development investor and brokers could help you do this too. Would help you with like cash on cash, and cap rates and all that fancy stuff. Like I said, I wasn't that fancy. I was like, can I afford it? Yes, I can afford it. Is this asset going to grow? Yes, it's going to grow. Um, and my goal was to get cash flow positive in the building. I figured if I was cash flow positive in the building, um, then the value of the building was going to grow, and that would be a win. Some people want to be, that's the cap rate and stuff. Some people want to be, have more cash coming in. That's a great investment. That's wise. But when you are an owner operator, you have a little bit of leverage to not demand as high as returns.
Mm. Yeah, I think the way you explained it to me when we spoke last week was you wanted to be at least cash flow neutral, ideally a little bit cash flow positive, and you knew in the Greenville market that things were going to appreciate. So, if listeners are in a market where maybe it's not as hot as Greenville is or was, you need to worry a little bit more about the appreciation potential. But the way you described it was you just wanted to make sure, you factored in all the costs, including property management, including brokers, including everything, that you'd at least be cash flow neutral, if not a little bit positive, and then you would bank on the appreciation in the Greenville market, right?
Yeah, and I would say those are your operating costs, right? So before you get to your operating costs, you have to make sure what your loan is going to be, and because you're probably buying a building that's going to need some upfit. So we call that upfit or TI, tenant improvements. So it was weird because I owned the building, but my business was going to be in the building. So I had to do tenant improvements in my own space. That's going to be on me. Um, and so this is the mistake I referred to, is that we really didn't set a, this sounds crazy, but we really didn't set a budget for how much, what the ceiling was for what we could remodel. Because we were two owner occupied owners going in this building, we sort of just built it how we wanted it to. And money was very cheap. This was 2015. Money was like, I think our loan was like 3% or something like that. Money was very cheap. And so we put way too much money into the building. And as a result, and by the way, the building, it was an old textile like warehouse. It needed tons of work. And we ran into lots of surprises, as you could imagine. And so we ended up putting just way too much money in, and that did put us cash flow negative for several years, where we had to do equity calls, capital calls, and contribute to really the operating fund. So we had cash, and that was a little bit. To be honest, I was a little disappointed in my partner that, because he is a developer, that he didn't foresee that. I was a little disappointed in myself
Yeah, yeah,
that I didn't foresee that. But even with that, in the long run, it's still going to work out beautifully. So
cool. And so you've also invested in some residential properties, right?
yes, yeah, I have. So one, yeah, so real estate has been good to us. Maybe, if you're in your index funds and stuff like that, I might be over indexed in real estate in term, but it's been pretty good. So, Greenville is 40 minutes away from Clemson University. I have 4 kids, and I predicted that 3.5 of my kids would go to Clemson. I was about right. It ended up being about 2.5. So I just, college is unbelievably expensive, as we all know, but it's the housing that gets you. I mean, to me, it's like the room and board has become so expensive. And so again, I sort of did the same logic. I'm like, why would I pay $10,000 a year, or is it a year or semester? I think it's a year. $10,000 a year for housing, just housing. Like what would that buy me? Did that back of the napkin test again, and at Clemson, I was very, very fortunate to buy a condo that is right on the border of the campus, so you can still walk to school. So what's happening, real almost nationwide with big schools, especially, like, they're running out of housing on campus. Like, you can only, like, it's only available to freshmen, and then after your freshman year, you're basically commuting, and which is true at Clemson. So anyway, long story short, there is that, yes, we bought this great condo. It's very close to campus, and it has appreciated considerably because, again, Clemson has sun. They used to have football, not as much anymore, but Clemson's been a popular place, and so that's been a great investment too.
So when you're searching for properties, how do you go about doing that search? Do you do it yourself? Did you, work with a broker? How did you find the properties that you wanted to buy?
Yeah, so there, I use LoopNet, so LoopNet, which is like Zillow, but for commercial properties. So that was probably the primary way. And then, my experience with commercial brokers is like they're like realtors. I don't know if you've looked for a property recently, but again, I would know about properties before the realtor does usually. And I'm actually for if people are watching this, I'm you can see my background. I'm at my cabin in North Carolina, and this is a perfect example. Is I was looking for a very specific type of property, a log cabin, and I found it, 3 days. I found it 2 days after it was listed, and well before my realtor ever knew about it. So, I think it's almost like these days you're your own advocate for your healthcare, your own doctor. It's like you got to be your own realtor. Um, so I'm sure I found it through LoopNet, the commercial, and then the Clemson property. My son was actually in the condo as a tenant, and I said, "Hey, ask your landlord if he's interested in selling." And sure enough, he was interested in selling. And like that's like if you looked at the MLS for Clemson, you will see zero houses. Like you only buy those things word of mouth.
Hmm.
So you gotta be if you really want it, you gotta be scrappy. You gotta be scrappy, and that's how I bought 3 properties now.
Okay.
Is because I was scrappy.
How would you compare or contrast the residential condos you bought versus the commercial properties? Like if you're a, regular business owner thinking about investing in real estate, kind of make the decision commercial versus residential, how would you compare the two?
Okay. A lot of things came up in my I hope my banker's not listening to this. I mean, it's magnitude, and so for instance, for the condo, let's just say that I bought that for 200 grand. Um, if it burnt down and I didn't have insurance, I would still be okay. Like it would stink, but I'd be all right. The building is a magnitude of at least 10x that, maybe 20x that. If if I can't make a payment on the building, I'm in trouble, right? So it was sort of like I don't know why the bank is lending me this money, but they are, and I hope nothing goes wrong, right? So there's definitely some risk. Now I felt like I had enough friends and family that if I got in a bind, I would be okay. And I also felt that if it really got really bad, worst case scenario is I'd have to fire sell the building and maybe have a note that I'd have to pay down over time. So but yeah, you definitely want to think twice about it when you're doing the deals. And I would say the due diligence on the commercial loan is a lot heavier than like real estate. You got to jump through a bunch of hoops, and it's sort of stupid. Um, Real estate or commercial real estate, when they're loaning you that much money, they're really want to understand everything financially. So
Yeah, I mean, with the residential, everybody needs a place to live. It just,
yeah,
and with the commercial, and especially these days, I mean, I don't know. I get nervous about commercial because not so many businesses have gone virtual.
yeah,
Like,
yeah. I know. It's that isn't that interesting, and we've been 100% occupied for 10 years. We're in a really cool part of town. We're in a really cool, we're in the trendy warehouse district type space. I mean, it's cool. But yeah, I mean, that would be concerning to me too, but it's worked out. Yeah.
so I got to ask you, since you mentioned you're in a log cabin in North Carolina, whereabouts in North Carolina?
Yeah. There's a cute little town called Brevard, North Carolina. And Brevard is known for its mountain biking. It's sandwiched between DuPont State Forest and Pisgah National Forest, and it's just a absolute beautiful. So I am outside of a little town called Rosman, which almost nobody even around here has heard of from. It's an hour away from Greenville, so it is magical from a standpoint of you just drive an hour away and you're in a completely different. It feels like a completely different part of the country. Like I'm in the mountains. I'm staring at the Blue Ridge Mountains right now. It's beautiful. But yeah, Rosman has 700 people. There's a lake called Lake Toxaway, which is one of the most beautiful lakes in the country. Mountain lakes in the country. A lot of Atlanta CEOs have houses there. Um, I couldn't even sniff a property there. But yeah, so it's just a beautiful part of the country.
Cool.
Yeah. Have you been? Do you have ties in North Carolina?
Well, I went to college at Duke in Durham,
Oh, okay.
and my roommate, first year freshman roommate, was from Candler, which is right outside Asheville.
Yeah.
Um, and I never actually made it out there. I did interview
Oh,
for a job in Charlotte my senior year. So, but
okay.
I stayed basically on the highways more or less, in the beaches of, the Outer Banks of North Carolina. Took a
Yeah.
family vacation to Carolina Beach several years ago, but I've never actually been out to like the western part of the state. Been close in Tennessee though. We've done Dollywood a couple of years with my kids the last couple
Yeah.
summers, but haven't actually made it into Western North Carolina.
Yeah. It's a beautiful part of the country, and North Carolina. You got Western North Carolina, the Appalachians, and then you got Charlotte and to Raleigh, almost like the cities,
Yeah.
and then you got the Outer Banks, of course. So yeah,
Cool.
diverse state, but yeah, I love coming up here, and I try to get up here a couple times, couple days a week, and just work and write and do podcasts. Evidently,
Nice.
yeah,
So you had a marketing agency, you got into real
hmm
estate along the way, and now what are you doing these days?
yeah,
What's your day job these days?
yeah. Well, we're living in some interesting times, right? So, I mean, I started my web firm in 2001 when I felt like that it's sort of like it was sort of the internet was just happening, right? And that was really exciting times. How are we going to apply this newfangled internet thing to business? Um, and I'm just feeling the same way, maybe times 10 with AI. So, maybe that's the environment. What I'm doing is I'm doing executive coaching. So in 2014, I was sort of stuck in my business, and I hired an executive coach, and she worked with me for a year, and it was life changing. It was unbelievable. And so I went and got 2 coaching certifications in 2016 and 2018. And my whole thing was I wanted to coach my managers to coach their people, not to manage their people. And then I just knew that when I sold, this is what I was going to do when I grew up. And so I absolutely love coaching. So I'm coaching founders with less than 10 employees, and who are most likely they started something and they just feel stuck. They just feel like they're working too much in the business. They're working too hard. The juice isn't worth the squeeze. And so I'm really helping them get unstuck. And at the same time, what I'm discovering, this is just really interesting, is oftentimes they want me to really help them implement the work to do it. So, like a coach just asks questions, a consultant just tells you what to do. Neither of them do anything, right? So my clients are starting to say, "Hey, can you help me with that? Can you actually like, do you know how to do that?" And I'm like, "Well, yeah, I do." And they're like, "Well, can I pay you to do that?" And I'm like, "Yeah." And so I used to be a programmer, part of my CPA, and I was a computer science minor and or emphasis, and so I was a hack programmer, but now with vibe coding, I can the things you can do are just unbelievable. And so I am coaching and helping my clients by implementing vibe coded solutions to help run their business. It's the craziest combination, but the coolest thing ever. So I'm having a blast.
Huh? What kind of tech platform? What's the tech stack that you work with?
Yeah. So have you gotten into any vibe coding at all, or is that in your wheelhouse?
Not really. I mean, we do have custom software we built, you know, the expensive hard way in 2000,
Yeah.
starting in 2019. We
Yeah.
spent a lot of money with developers building software that could probably get done for a tenth of that cost now. But yeah,
Yeah, it could probably get done for a tenth of the cost. It would probably do what I'm finding is it could do exactly what you want it to do and nothing of what you don't want it to do. Yeah, that's what vibe coding offers. But my tech stack, I'm using Cursor, which is an IDE. And again, you're gonna put me on the spot and be like, I can't even tell you what an IDE is. I could look it up, but it's sort of it's a place where you can code with agents, and then you have access to all the LLMs. So OpenAI's Codex and Cursor, or and Claude, and all the LLMs, and it's basically a whole ecosystem of where you can do all of your vibe coding. So that's my main local tech stack. And then I use Supabase for databases. I use Netlify for hosting, and I'm even messing around with Cloudflare as well. So it's fun, man. It's the wild, wild west, and the what you can do is just amazing.
And so how do you fit that into the business coaching?
Yeah, well, so like, just for example, tomorrow I'm meeting with well, I don't know if that's a great example. I have a fractional CFO client, right? And he wants to have an operating system of how he runs his business, to do financial reporting, to do project management, to do um, CRM, and so as we talk about those strategies, like, hey, how do you manage employees? How do you get things done? How do you set up projects? How do you do marketing? How do you what's your messaging? As I'm coaching around those things, we're also creating the tools and the processes and the systems to help him execute them. So it's a from that standpoint, I think it's a really unique and cool model, and and giving him tools to execute on. Um, so yeah, so I guess that's an example of how I'm doing that.
Cool. Now, when we spoke the other week, you talked about two or three different traps that entrepreneurs fall into.
Yeah.
Yeah, what can you talk more about those traps?
Yeah, yeah, it's interesting because there I call them three traps. The first thing is, I just call it the founder's threshold, and I'm typically working with businesses that are under $1 million in revenue. So 90% of businesses do not reach $1 million in revenue. So only 10% make it, right? And I think that's just it's a crazy stat. And I think what that stat highlights is that businesses don't get big enough to grow beyond the founder. Right. And, or better put, like, the founder doesn't have the ability to build a business bigger than themselves. And so and that's fine. That's fine. That's perfectly fine. You usually, if you go start a business, the skill that you're doing, right? You're not an expert in being an entrepreneur or running a business. You need help for doing that. So the first trap is the founder's trap. And this is the most common, and you literally get stuck. You just get stuck being the cog in the wheel. Like, you're doing everything. You're doing marketing. You're doing sales. Well, guess what? When you win marketing and sales, then you got to go do the work. And once you do the work, you look up and you go, oh crap, I go do marketing and sales. And you don't want to do any expense reports or taxes or QuickBooks or whatever, right? So that piles up, and on and on and on. So you're the one, you're the limiting factor. The founder's the limiting factor, and that's the founder's trap. And so we gotta get out of that trap. And then the second trap. Well, do you see that in any of your clients, or?
Oh yeah. Oh, definitely. Definitely. It's hard because a lot of people who start businesses, they're practitioners of something.
Right.
They're marketers, they're software designers, they're engineers. They do something. Very skilled at. They're very great at it, but they don't have experience with HR and hiring and marketing and sales, and it's hard. Yeah.
Yeah, reading contracts, or again, buying buildings, or signing leases, or yeah. So yep, so that totally makes sense. And so you got to learn how to do that somewhere, and so that's one thing I help with. And then the second trap is the trap of ambiguity, and that is it's really I think comes from scarcity, but it's this idea is like, I'm going to keep everything ambiguous so I can be all things to all people, instead of picking a niche, having a very clear offer, standardizing standardizing your product or your service, and just being intentional and defined. And so when we try to keep all these, plates spinning and balls in the air, you just can't get any traction. And so, so in that, I'm really helping the founder decide on what's important, what matters, and just focus and stick with what matters. And when you do that, like, amazing things happen. So
Yeah, I've struggled with that some. I would say my struggle has been a little bit more like, I don't know, probably not saying this well, but I feel like I've been too ambitious in some ways. Kind of in my mind, had all these different service lines and service offerings, and I love standardization and documenting. And so in my mind, I have very clear service offerings, but I have, five different service offerings, and I've got a small team. And in my mind, yeah, maybe we can do all five, but my team's like, you know what? What are we actually trying to do here? We can't do all these five things. They're too complicated. Let's just pick one or two of them. So I tend to, and I've gotten better over the years, but I've always kind of dreamed big and had these huge designs in my head, but were just unrealistic for people to execute on.
yeah, I think what my experience has been is that complexity comes quickly. When you add one, you just one more option, one more color, one more, whatever, and then all of a sudden you go from like giving your clients and your employees like seven options of different to like 53,000, right? And so like I heard a great quote is that clarity is simplicity divided by two. And like, so we know that you have to be effective, you got to be clear to the market, you got to be clear to your team, like, and that means you got to make it really simple, divided by two. So like, your master plan might be great with five different service lines, but that might need to come 15 years from now. Maybe it's a one or two. So that just would
Yeah,
be that would be an example. But
yeah.
yeah, and by the way, all these things have happened to me. It's not like I knew all these things. I was like, oh, I started my business. No, I learned these things along the way. And the last trap is the trap of survival. And that is so I had a mentor tell me, he said, entrepreneurs are the best in the world at breaking even. Like, they are unbelievable at breaking even. And I would experience it like I would have a horrible year, or it seemed like a horrible year. And then all of a sudden lo and behold, I would get some wins at the end of the year. We would break even. Or I'd have a great year and I'd take my foot off the gas, and lo and behold, we would break even, right? We'd have a horrible end of the year and we'd break even. And so and part of it, of the survival mode and scarcity mode, we get so focused on cash flow and making sure we can meet payroll and making sure we can make rent, that we don't really start, we don't have a wealth mindset. We don't have a mindset of abundance. So that starts looking like, I can fund 401ks. I can offer healthcare. I can, you're starting to invest in your benefits and stuff, and which is investing in your people, which produces retention. I can buy a building. I'm gonna use this, instead of, I can take a little risk and buy a building. So once we get out of this survival trap, we can really start investing to grow. So those are the three traps that I think are core to why people get stuck, why they never hit $1 million, and that's what I help my clients through, systematically.
Yeah, I had a client, I think, struggling with their survival trap a couple weeks ago. He sent a note, kind of mapping out his cash flow plan for the next 3 months. And I looked at it like, okay, this is good. You have to actually be able to make payroll for the next 3 months, but there's nothing in here about what's your labor loaded gross profit margin, what's your labor value multiple, like is the core business profitable and successful or not? Like, you got to separate. what are the economics of the business from short-term cash flow? And yes, short-term cash flow is key. You got to stay solvent and in business, but we need to be looking at the operating metrics that help you understand what you need to do to have a sustainable, viable, long-term, valuable business. So I definitely sympathize with that trap.
Well, I think your services are key to that trap, because I can tell you, I would say it's 100% of clients and prospects that I work with don't have financials. And if they have financials, it's cash base. And I don't know about you, but from my standpoint, cash base is almost worthless, in terms of, it tells you if you have money in the bank or not.
Yeah, yeah,
But so they're not on accrual, and like until you start getting those financial statements and that reporting to make decisions on, it's hard to get out of survival mode. It makes sense why they would be in survival mode, right?
yeah,
You're just like, do I have enough cash to make this purchase? Yes, I do. Okay, I'll go make it. It's like, oh, it's horrible. So
yeah. Yeah, or they think they need to spend a bunch of money at the end of the year to reduce their tax bill.
right,
It's not worth spending $1 to save 35 cents.
that right,
You're wasting 65 cents that you could put in your pocket. So,
yeah. It's an amazing phenomenon, that mentality.
but yeah. So, what's the name of your coaching business?
Oh yeah, it's Made to Matter. So madetomatter.coach is where you can find out. And I talk more about the founder's trap and the founder's threshold and the three traps there. But yeah.
Awesome. So, if people
Yeah.
want to connect with you, Adam, what's the best way for them to do that?
Yeah, Made to Matter is .coach. So Adam at madetomatter.coach. You can email me, or LinkedIn. I think it's just Adam Landrum on LinkedIn. You should be able to find me. And I'm active, active on there, and I would love to hear from you and talk to you. And if anybody has building advice and you want some layman advice, I can give you some layman advice. But the lay person here has been somewhat successful, so I'm comfortable doing that. But if you want even better advice, then we could talk about growing an entrepreneurial venture.
Awesome. Well, thank you, Adam. I really appreciate you sharing your experience in general with your career and specifically with your journey into investing in real estate. Hopefully, the audience has found this insightful.
Yeah, I hope so. And Cal, thanks for having me on again. It's been a pleasure.
Yeah, likewise. So, really appreciate it. This has been another exciting episode of Empowering Healthy Business. Until next time. Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage SmartBooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com, or message me on LinkedIn, where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.